end of the day, we did know it was going to be bad. And the analyst community, to be honest, didn't have any understanding of even how to forecast this quarter. The range of EPS estimates going into this quarter range from negative 50 cents to positive 40 cents. So wide range of outcomes there that ultimately speaking, nobody really had a clue. But let's get to the core of what's going on here. Nike product remains hot. The Air Force One is a hot shoe right now. There's no demand problem here for the product. The problem is just COVID. And as you know, that's a one-time issue that looking forward, now that their stores are reopened, we expect sales to reaccelerate. And this is one company that actually is investing in its business during this COVID shutdown so that on the back end of this, they can continue to consolidate and take market share.
All right, let's talk then about the picture globally. We know that they are trying to open up a lot of their establishments in certain hotspots. China comes to mind there as well. How exactly does the geographical breakdown now play out for Nike if there is, in fact, another potential wave of the coronavirus, not just here in the U.S., but in other key markets as well?
Well, we've already seen that China has returned to growth. And to remind you, when they reported last quarter, they gave guidance that they expected China to be flattish to slightly positive. And people at the time were very skeptical of that. They said, there's no way, not with COVID being as dangerous as it was back in March when they said this. And sure enough, what happened is it's returned to growth, right? So we would expect the United States and Europe to continue to accelerate from here. If we do go back into another shutdown, what I can say is that Nike's digital assets prepare it or make it positioned extremely well to continue to be able to sell and engage with its consumer during said shutdowns, right? And we've seen this happen during this quarter. This quarter, their e-commerce sales were up 75% in June, the month of June, even when their stores reopened. In the month of June, their e-commerce sales were up triple digits. So even now, with stores reopened, with people going back to the mall, Nike continues to accelerate its digital business. And they made the theme of the call entirely about digital. We're going to invest in digital. So if there is another shutdown, I would say that Nike is one of the best positioned companies to be able to weather that shutdown through its digital capabilities.
Let's put this in perspective. Just a few moments left here. Within your coverage universe, then, is Nike the favorite? You mentioned the product mix. Air Force One doing great. I'm sure the Last Dance, the Michael Jordan documentary, helped drive some sales there as well. Is Nike the best of breed now when it comes to athletic apparel and footwear?
Well, I would say that the one thing about Nike, yes, Nike's one of my favorite companies. I have a wide coverage universe, and if my favorite is Target, to be honest with you, for other reasons. But in Nike specifically, their product remains hot, right? Their digital capabilities are elite. So they check the box for every stock that you want to own. And in my view, the only stocks that you want to own today are either consolidators, industry consolidators, that are positioned to take market share, or digital leaders. And Nike's positioned very well for both of those. So it's a stock that I say you should buy, but I have a wide coverage universe, and Target would be my favorite.